Good morning. Today we're going to talk about the basics of options and what they are and how they work. I know I've talked about options in some other videos, so I'm going to try to make this a introductory type of information so that you guys might understand them a little bit better. Stick around, watch the video. I might go into a trade or two at the end, so I hope you enjoyed today's video. Good morning. My name is Adam Kahn, and I'm the Rational Investor. Today is Wednesday, October 18th. I hope you're all doing well. And today we're going to discuss the basics of options. But before I forget, do me a favor, hit that subscribe button, smash the like button, make some comments if you have questions or if you have ideas or things that you like about options and options trading. We'll delve into all sorts of things today, and I'm hoping just to explain the basics. The other thing is I'm going to put a link in the description on opening an account at Sofi. If you deposit $10 or more, you're going to get $25 added to your account. They also offer other options where you might get as much as $275 as a credit, depending on what you're doing with them. And it gives my son a little bit of a gift. I have an account for him. He's 12 years old. When it happens, he gets super excited, and I appreciate the support. More importantly, hit the subscribe and like button. For those of you who've made it this far, you're beating out 80% of the other people. So let's get into the information about options. So let's start with, what is an option? An option gives somebody the right to buy or sell an underlying asset. Now, when we're talking about stock options, we're talking about the underlying asset is the stock, and each option is in an increment of 100 shares of that stock. There are two different types of options that trade. One is called a call and one is called a put. A call option will increase in value as a stock moves higher, and a put option will increase in value as a stock moves lower. Sometimes people say that call options are a bet that the market's going to go higher, and put options are a bet that they're going to go lower. I don't know that I'd really quantify it as a bet one way or another, because you always have a buyer and a seller, and they're taking opposite positions on it, and possibly for all sorts of different reasons. It's not necessarily that they're making a bet. It may simply be a hedge against a position, or the strategy I use with selling calls is I'm using that to get income on assets that I own, is the way that I think of it. So if you care to know a couple of technical terms, the buyer of an option is called the owner or the holder, and the seller of the option is called the writer. Now, the owner or the holder pays a certain amount of money for that option, and the seller receives that money for writing the option. Each stock option has an expiration date, they have a price where it's trading, and they also have a strike price as to where that option becomes in or out of the money, so to speak. The price of that option is referred to as the premium. So the buyer of the option pays the premium, and the seller of the option receives your premium or collects that premium. On the day of expiration or the day after, the owner of that option or the buyer has the right to exercise that option if they choose. Now, typically they've done that if the underlying asset has gone past the strike price, meaning if you've bought a call and you're the owner, and whatever stock you're buying that call in is now higher than the strike price of that option, you probably want to exercise that option, and vice versa for a put. If you've bought a put option and the stock is now below that strike price on the day of expiration, odds are you want to exercise that option as well. So I'm going to put a couple different option prices and charts, so that, not charts, but how it looks on the screen when you pull it up right here, if I can do the picture-in-picture properly. And I'm going to use Meta, or what I always still call is Facebook options, just to show some examples. The first one I'm going to show is just going to show the different prices, the strikes, and the price of the stock. I took a screenshot yesterday. the stock was trading around $323 if I remember correctly. It'll show that price right in the middle of the picture, and then you'll see on one side of the chart it'll have the call options, on the other side it'll have the put options. It'll show the date that those options are expiring, and then it'll show the different prices. So I'm going to start with an option from April 19th, 2024 on Meta to show you how I might use a call option. So if you look right here, I'm looking at the April 19th, 2024 400 call at the time of the recording. When I was looking at it, the option had a bid price of $13.30 and an offer price of $13.50. So if you're buying that option, you're going to pay the offer price, you're going to pay $13.50. And if you're selling that option, you're going to sell it at the bid price of $13.30. So what I do is if I own 100 shares of Meta and I'm looking to collect a premium or the equivalent of what I would think of as a dividend, I might be willing to sell the 400 call at the $13.30 price. What that does is, since each one is for 100 shares, I have to have 100 shares of Meta. If I sell one option at the $13.30, I collect $1,330. I get to keep that money no matter what happens with the stock. If the stock rallies above 400 and the buyer of that option wants to exercise that right on it, I've committed to selling it at 400 in April when the option expires. So maybe it goes from 323 to 500, I've still committed to selling at 400. Now, if the stock stays where it is, I still get my $1,330. If it goes lower, I keep it. And even if it gets exercised, I get that money as well. On top of that, if it's gone through it, well, I've made close to $70 on the stock as well. But for me, that gets me a $1,000 and change dividend for about a 6 month option. And I think that's decent return. If I can do that twice a year, get around $2,600 on my Meta holdings. And if I get taken on the stock, well, I've made a nice profit on that trade too. Now, if the stock drops, you may have to look at a lower strike price to get the same type of return, but I like doing that. You guys have to make your own decisions of what you like to do with your financial decisions and not rely on what I teach or talk about. I'm just sharing the things that I do that I found success for the way I like to trade. Everybody watching, please do your own research, talk to your own financial advisors to make your decisions. The second example that I'm going to use, I'm using the same date, so the April 19th, 2024, but I'm going to look at the 270 put this time. When I looked at it yesterday, it was 1240 bid at 1265 offer, and there's two ways that you can use the puts. So if you're long 100 shares and you're worried that it could go lower, maybe you buy the put, the 270 put for $12.65. So you spend $1,265, and if the stock goes below the 270 strike price, well, you're able to sell those shares at 270. So if it falls to 240, 230, 220, you've gotten out where you wanted to. The other way, which is more how I tend to use options, again, you guys need to do what you're comfortable with, is I might consider selling the 270 put if I'm hoping to buy Meta if it gets down to 270. I get to collect the bid price, so I get $1,240. And if Meta is below $270 and the buyer of that option exercises their right, I end up having to buy 100 shares at $270. Now the risk is it's at 220 when that happens, and I'm still buying it at 270. In the meantime, I get to collect that $1,240 either way. If the stock never gets to the 270 where I'm hoping to buy it, at least I've made some money. And if I'm willing to buy it there anyway, and I'm planning on putting a bid there, well, it automatically will trigger that if it's below that price on the day of the strike. Hopefully all that information was super simple. I've helped you guys understand options a little bit. If you have questions or want to talk about specific trades and ideas, because I like mixing them in with my underlying assets in terms of ways of getting paid dividends, I also really do use it to get into positions, because when I look at a stock like Meta today that's trading 323 or wherever it is today, that's where it was yesterday. In reality, if I'm willing to buy it at 270, instead of just putting my bid in and waiting, I like to collect that $1,200 in the meantime, because if it never gets there and it just goes higher, well, at least I got something, and I didn't waste my time. And if it gets below my price where I would have bought it anyway, even if it falls to 250 or 240 or wherever it is, I'm happy to buy it at the 270, because that's where I was planning to. Now, that's not a trade I'm actually putting on, which is why I say you guys need to make your own decisions. It's just an example, um, but it's a way I like to get into stocks that I'm looking at. Do me a favor so I don't forget again. Give a thumbs up, like, subscribe, and stick around for other videos. Have a great day.